Hey, it's Ted McGrath. Welcome to today's show. So we're going to zoom in today on Bitcoin cycle peak or not. I'm going to share some data from Tom Lee that says that this is not the peak of the cycle and some reasons why. Yesterday was quite a spooker. Last night, Bitcoin dropped to around $89,000. So we did touch the 80 range at 89K. And going to get in and share with you some wisdom from Michael Saylor as well, and why Saylor and Tom Lee from BMNR think we're actually going higher and we're going to rally from here, despite the fact that there's bearish sentiment and lots of questions of what's going to happen next. Not tax advice, not financial advice, not legal advice. Do your own research all the time and make your own decisions based on data and your own research. All right. If you want to also get my new book, Money Game, you can snag it down below. I'm still trading every single day. As I trade, I'm picking up more shares of BMNR at the bottom. I picked up $5,000 worth of shares of BMNR yesterday, trading at the bottom. And I continue to deploy my trading strategy. So if you want to get it, free video down below, plus my new book. And I hope it serves you. So let's jump in and let's hear from Michael Saylor about what he thinks about the rally. Mind you, this video is a couple days old, but it's kind of showing on the ticker the price range of where we're at kind of today. We're close to around 93,000 today. This is a $94,000 price. So this is 2 days old, but the wisdom's still there.
Saylor is here, strategy founder and executive chairman. Good morning to you. What do you think? 150 by the end of the year? What do you think's happening here?
You know, I think we all want to go to the moon, but if you want to ride the rocket, you got to be prepared to pull the G's. Over 5 years, Bitcoin's had like 6 brutal drawdowns. If you roll the clock back 13 months, we were sitting around 68,000. And then after the Trump election, we had this incredible rally from 68 to 106,000 in 5 weeks. If you go back 14 months, we were about 55,000. And so if you'd said we're going to go from 55,000 to 94,000 in 14 months, that would have exceeded any reasonable investor's expectations. Over 5 years, Bitcoin's up about 50% a year on average for the 5 years. Gold and S&P are setting the cost of capital at 14%. My company's strategy is up 71%, equivalent to NVIDIA. There's no other stock in the S&P that's done any better. So I think the volatility comes with the territory. If you're going to be a Bitcoin investor, you need a 4-year time horizon, and you need to be prepared to handle the volatility in this market.
So when you look at the price right now, and then we'll talk about the implications for strategy, but when you look at the price right now, what does the upside at this moment look like to you, and what does the downside in this moment look like to you?
You know, I feel like we put in a pretty strong base of support around here. There's an incredible amount of leverage coming out of the system, a lot of liquidation. A lot of the OG holders were selling at the $100,000 level, and so I'm fairly comfortable at this level. I would think that we'll build from this base and we'll rally from here. Obviously, it's hard to make a forecast for the end of the year right now, given what's happened over the past few weeks, and especially the shift in the macro environment. But, you know, as you know, my view is Bitcoin's going to outperform gold. It's going to outperform the S&P. It is digital capital. And so if you're a long-term investor, this is the place to be.
In terms of the way your fund is structured and the debt that you've taken out to effectively buy Bitcoin, what are the trigger points, just so people understand the full risks involved for you in terms of some of these preferreds and other things, in terms of where Bitcoin needs to lie, either on the low end?
Well, I mean, it's pretty important to note that we're not even 1.15 times levered. We're very fractionally levered, and our debt that we have is 4.5 years out. So we don't really have any trigger points anytime soon. And if Bitcoin were to fall 80%, we're still over collateralized and we're fine. So our balance sheet's pretty stable. The company's strategy, just like an intelligent bank, would be to build amplification for the common stock using preferred equity. So the equity never comes due. It's a dividend payment declared by the board. It's not a coupon. We can't be in a default. There is no credit default situation from the digital credit that we're selling at this point.
I was curious if you could comment on something we heard from Cathie Wood last week. You know, she has a target, I think by 2030, she had it at $1.5 million a coin, and recently suggested it might actually be closer to a 1.2, which is still pretty remarkable unto itself. And yet, when she explained her new rationale, it was actually that stable coins, the sort of emergence of stable coins and the growth of those coins being used for transactions, she argued could ultimately crowd out some of the use case for Bitcoin. What did you think when she said that?
I think the entire digital assets economy is exploding and growing in a bunch of different dimensions. Right now, the way to think of it is that half of the economy is built around Bitcoin. It's digital capital. Bitcoin is digital gold. And the killer application on top of digital capital is digital credit. Instruments like Stretch, STRC, credit instruments that pay yield. And that's a very simple business. The other half of the economy is digital finance. And it's going to be built on the proof of stake networks that are emerging, the Ethereum Solanas, the BNBs. And the killer application for that part of the digital assets economy is tokenized currencies, a la stable coins, tokenized securities, tokenized real-world assets, tokenized brands, and DeFi in general. Well, that's a very complicated technical development, and I'm sure that stable coins are going to go from hundreds of billions to trillions of dollars, but it's not really competing with digital capital. No rich person wants to buy the currency instead of an equity or a real estate or a capital asset.
Michael, given where Bitcoin's trading right now, are you buying?
We are buying. We're buying quite a lot, actually, and we'll actually report our next buys on Monday morning. I think people will be pleasantly surprised. In fact, we've been accelerating our purchases.
Are you ever not buying, Michael?
No, we're always buying. Bitcoin's always a good investment.
But no, that's interesting, though, in terms of buying today at $95,364 versus buying 2 or 3 weeks ago. You're saying you were buying it at both. If you were looking over the last year, sort of at your average, do you weight the buying based on trading?
We now own nearly 3.1% of the network, and we bought it on a blended average about $74,000 a coin. The point that I would make for any investor is, if you have money you don't need for 4 years or longer, and if you don't trust anybody, you want no counterparties, you just want to own a piece of the global digital economy, you buy Bitcoin. It's the commodity. If you're an equity investor and you want to bet on digital credit and you want to bet on digital capital and you want some amplification, you buy an equity like MSTR. Right. If you have money for less than 4 years and you're an investor and your time frame is 12 weeks, you should buy the digital credit. For example, the credit instruments we've created have stripped the volatility off of Bitcoin. Bitcoin's vol is like 45 on a trailing 30-day average. We have instruments at 28, 21, 15, and Stretch is a vol of 8. So if what you want is like a serious yield, you want the credit. You don't want the equity or the commodity.
Mike, I want to thank you for joining us.
There he goes. Michael Saylor, always buying. Yeah, amazing, isn't it? So anyway, we're going to get into a presentation here from Tom Lee. I'm just going to share the summary of what he reported the other day on some new data, which makes it interesting about the cycle, where he thinks we're not at a top right now. The 4-year cycle is dead. I think we've all agreed on that. We're way past the 4-year cycle. This is a different time frame. Michael Saylor's always buying. BMNR and Tom Lee, they continue to buy. I am buying at the bottom, but I'm buying through trading. So yesterday, as I said, I picked up $5,000 worth of BMNR through trading and picked up shares at the bottom. I also did put some fresh capital in yesterday to BMNR and bought some fresh new stuff, but I also then trade out of it too. So I buy in, I sell out. So I bought in yesterday and I sold out today on it. And then I'll buy back in. All right. So I'm trading BMNR constantly on a daily basis. I hold some BMNR long term, but I'm trading it every single day. If you want to get access to my book on how I'm trading and picking up shares at the bottom, certainly grab my book and my video training that comes with it. Okay, so let's get into what's going on here. Well, we actually have to go all the way back here. Hold on. You're going to have to bear with me here. So we're going to do this slide in reverse here. So basically, Tom Lee came out with some new data, and this is data that his team from Fundstrat basically researched. And here's what it shows here. Why Bitcoin has a 4-year pattern, but it's not what people think. All right. So the typical 4-year pattern is not what people think. If you look at Bitcoin's price from way back in 2010 until now, you'll see something kind of funny. Every 3.9 years, basically 4 years, Bitcoin goes really high and then it drops for about 1 whole year. So anybody who's lived through a bull run before, I've lived through 3 different bull runs. I first started buying Bitcoin back in 2018. And so I've seen multiple bull runs. Now, if you look here, typically you see Bitcoin hits its 4-year cycle and then it drops for a full year. You have a major bear market, goes down by 80-90%, and then it goes back up. But what's happening here is the go up for almost 4 years and fall for 1 year and up again and down again is kind of over at this point. So people say it's because of the halving, and typically the halving, if you don't know what the halving is, it's pretty simple. The halving is when Bitcoin cuts the reward for miners in half. That means fewer new Bitcoins are made. So every 4 years, the supply cuts in half, but that's not the reason anymore. Less supply, price goes up. That's the typical explanation. And yes, halvings do happen around every 4 years. But here's the main problem. It used to explain Bitcoin's pattern, not anymore, because something new showed up. You got big banks, you got big companies, even governments are buying Bitcoin now. Now, if you watch any of my shows in the past, you'll see that I'm talking a lot about financial institutions building on the Ethereum blockchain. They're building on other blockchains too, but you got the likes of PayPal, Morgan Stanley, JP Morgan, BlackRock, all tokenizing assets, and they're on the blockchain as we speak. BlackRock has massive amounts of money now on the blockchain. And more institutions are building on the blockchain. So it's a completely different space now. You got banks involved, you got companies, you got governments. I think everybody is pretty much in agreement with the idea that this is an institutional game now, and this is not a retail game. And that's the conclusion being made. These huge players, they didn't exist in Bitcoin's early days. So to think that the cycle is going to be the same is obviously not true, because we expected a huge October. I did. We expected a huge November. I did. And we didn't get it. So for those of us who are expecting the 4-year cycle, those of us who are expecting October to be big and November to be big, I was one of them. We didn't get it. And so we didn't get it as this game has changed. And I think it's official to say October's in the past, November's halfway over. We didn't get it, and the game has changed, but it doesn't mean that Bitcoin has peaked. So there's lots of other things that are on 4-year cycles too. The president election is on 4-year cycle, leap year, summer Olympics, winter Olympics, all that stuff, right? But the huge players didn't exist in Bitcoin's early days. So the halving alone can't explain today's big price moves that we've had from last year, where we were at, or I should say in 2023, we were at $30,000 Bitcoin in like November. And 14 months ago, we were at a $55,000 Bitcoin. And today we're at a $93,000 Bitcoin. So it's not a halving thing. It's clearly institutional demand, and it's new players getting in the game. This is an institutional game now. Now, what if the 4-year pattern is caused by the Fed, right? I'm one to think that liquidity has a big reason to do with it. We get liquidity into the economy. That's the story we've all been talking about. Liquidity comes back into the economy. It's good for Bitcoin. Question is, does it follow this pattern? Now we look at the charts here, and this is what Tom Lee says about the charts. The Fed did not cause the 4-year Bitcoin peaks. Liquidity changes did not line up with the Bitcoin cycles, and M2 money supply didn't match the timing either. All right. So what explains the 4-year pattern? This is new data. Okay. A smart analyst online showed a chart comparing copper and gold. And now you're probably thinking, why copper? Why gold? What does this have to do with Bitcoin? So let me explain it. So this is a chart that Tom from BMNR released the other day. You can see in the top left, it says Bitmine BMNR. They're responsible for this data. They said cycle, copper versus gold. So there's a copper gold ratio here. Now we look, copper is used in factories, machines, buildings, all the stuff that people make. Gold is more like money. It doesn't get used up. So when the copper to gold ratio goes up, it means factories are super busy. The economy is working hard. Businesses are doing great. That's called high industrial activity. And guess what? Every time this copper gold ratio hit a big peak, Bitcoin also hit a big peak. So you're looking here on the lower line, you see the copper gold ratio, which is red, glaring red. And then you see the copper to gold ratio up here on the red. And if you look at these years, these are the Bitcoin cycles. You can't see the chart down below in terms of the years, but you see, look at the Bitcoin bull runs. And you look here, 3.91 years, you see as copper gold ratio is up, you see up here, you've got the Bitcoin as well. So you got copper gold ratio versus Bitcoin. So when you look above, you got the Bitcoin cycle with these fluorescent yellow dots and lines here. And then you got the copper to gold ratio, and you see that they actually parallel each other and that they match up. So when copper gold ratio is up, Bitcoin's up. As it starts to trend down, Bitcoin starts to trend down. And you see this in 2014-ish during the bull run. You see this in 2018. You see this in 2020 and 2021. And what you see now all the way to the right is you're seeing that this ratio has not peaked yet. There's been no peak in it. You just see actually a red line that's down, and there's no up on it yet in 2024 and 2025, particularly 2025 right now. So this is indicating that there's not a top on Bitcoin yet. Okay. So it's like the chart is saying, the economy is super hot right now. Bitcoin might be topping out too. So when the economy is super hot, that's when Bitcoin's topping out. Economy is not right now. And I'll show you the index that says that it's not. So here's the important part. Right now, the copper gold ratio is not showing a peak. So you're not seeing a peak at all, and it's not signaling a top. So that's where you see it lower right here with the yellow circle. It's not signaling a top. So go back, 2014, you see, yes, copper gold ratio and Bitcoin at the top. You see a 2018 bull run, copper gold ratio, yes, at the top. You see it 2021 bull run, copper gold ratio at the top. You got a yes. And now in 2025, you don't see it at all. You don't see a top or a peak in either one of them. And this is what the data is showing. So it's not warning us of a Bitcoin top per this data. Again, this is per this data. You got to take your research and decide what it is for you. I think if we were sharing this data yesterday when Bitcoin hit 89,000, we're like, oh my God, I'm not sure if there's hope. I'm not sure if this chart means anything. But this is just data in the mix of lots of data right now. I don't think anybody can predict the future right now. I think if you look at Saylor in his recent interview, even not the one on Friday, but the one more recent, he thinks we're going to rally from here. He thinks we're at the bottom. If you look at Tom Lee, he continues to maintain that, we are in a super cycle for Ethereum, that BMNR and Ethereum will continue to go up into the future. And that he thinks we're bottoming out this week. So these are two, leaders in the space. Obviously, they have their own biases because they want BMNR to do well and they want MSTR to do well. But at the same time, they continue to put their money where their mouth is and they continue to buy. Okay. And so I'm just following, I like to watch good people. I'm following what they're doing. I'm following the research. I'm following what I believe is true. That's why I'm trading at the bottom and I'm picking up more shares. Wow, did we just scream up with Bitcoin? Is this even right that I'm looking at it? Yeah, Bitcoin just shot up even more. Wow, okay. We got a major run going up here. Wow, interesting. Okay. So, yeah, Bitcoin shooting up. So I'm going to go look at my charts to make sure this data is even correct. Everybody seeing the Bitcoin price right now? I'm like, is this an old... Oh yeah, that's old data on my phone. That's so funny how the data is showing incorrectly on my phone. So weird. Wow, that's weird, huh? Okay, well, never mind. What are you guys seeing on the Bitcoin price right now? I'm seeing 93,000. Is that what you're seeing? Let me know if you're seeing something different. Okay. So when you look at the data that Tom Lee sharing, Michael Saylor's sharing, we're not at a top. They think we're going to continue to rally, but they're also taking a long-term horizon on Bitcoin and strategy. And the point continues to be reinforced by Saylor, like holding Bitcoin is a 4-year time horizon at a minimum. Holding strategy is a longer time horizon of 5 years. And that's how he looks at cycles in 5, 10, 15-year periods is how he makes his decisions. Tom Lee looks at longer cycles too, but they're both bullish and think we're going to rally from here. Okay. So let's look at something else. This is the ISM. This is something that Tom Lee has not changed his tune on. He has not changed his tune on this. He said this a couple months ago. And he said with the ISM a couple months ago, he says we're below 50. And anytime we're below 50 like this, typically you're going to see the ISM run up, and then there's going to be some type of peak after that. Historically, when you see the ISM below 50, it's going to cross above 50 and go above, and then markets are going to rally from there. So he still thinks we're not done based on the ISM. So the ISM basically tells us how strong U.S. businesses are. And right now, when it's below 50, basically means the businesses aren't strong. Above 50, we're growing. Below 50, we're shrinking. So every time ISM hit a big high, Bitcoin also hit a big high. So this is the index that Tom's going by. He's like, the ISM has not hit a big high yet. So he thinks the ISM is going to hit a big high, and then Bitcoin will also hit a big high. Let's also not forget the amount of money printing that's going on. We have that in Japan, that they are issuing more money printing as of yesterday. We've got lots of data talking about printing of money taking place in different countries right now. Lots of relief coming with quantitative easing in other countries. And so it's only a matter of time before this happens with the government. Here in the US, quantitative tightening is supposed to end on December 1st. So that could have something to give a little short-term bolster to Bitcoin or BMNR or MSTR or Ethereum. But again, as Tom's saying, the whole cycle is not tied to liquidity right now. He says the cycle is tied to the ISM and tied to the copper and gold ratio. This is his new data. ISM is 48.7 right now, which means the economy isn't booming. It's not even at 50. It's definitely not peaking. So here's what we're saying. Bitcoin prices seem to follow how strong the real economy is, and the real economy isn't peaking right now. So Bitcoin probably isn't peaking either. All right. Again, I'm giving credit to Tom Lee on this report. This is his data. This is not mine. In simple words, we're not at the top. The signs are not flashing red. This is not the time to give up. Tom Lee gives the sign of hodl, hold, hold, hold. It's a reminder to stay calm, zoom out, and hodl. I don't think anybody stays calm in these markets. I'm certainly not staying calm. I'm trading like a wild man at the bottom of the market right now, picking up shares. And if we're going to have a bottom and be in a crappy position, I'm picking up as many shares as possible at the bottom, because in a video that I showed a couple days ago, if I pick up shares at the bottom when BMNR is at 30 and 31 right now, or 32, 33 today, when BMNR goes back up to 60 or 90, that's a huge, huge increase in ROI, huge. So that's why I continue to trade every single day and make moves to pick up more shares. So hold is the message from Tom Lee. So after learning about the Bitcoin cycles and why we're not at the top yet, here's something super important. While everyone else was scared and selling, Michael Saylor posted, we bought Bitcoin every day this week. Big week is what he posted on Sunday. And guess what? Strategy comes in and buys $835 million worth of Bitcoin. So despite what a lot of the sentiment is around fear in the marketplace, despite what's going on with Bitcoin dropping to $89,000 last night, Saylor continues to buy, and there's still demand. And this is from Europe. In the European Union, he went and issued Stretch, his new product. And when they did it, they raised about $715 million from issuing their new preferred stock Stretch. And as a result of that money, they went and bought more Bitcoin. They bought 835 million. So it's still showing that the people who are investing in these products and the institutions investing in these products that Saylor has provided, they clearly believe in his vision of what he's doing. They clearly believe in the mission, because nobody's going to hand over $715 million cumulatively from these institutions that bought it. And certainly in another country where it's just becoming something that's new in another country, they're not going to hand over that kind of money if they don't think there's a future for Bitcoin and strategy. So Saylor continues to believe there's a future. He feels that we've hit the bottom. He bought 8,178 more Bitcoin. Average price is around 102,000 per coin. And even with the crazy market dips, his Bitcoin returns this year are still 27.8%. Whether strategy will get added to the S&P 500 in December, we don't know. With all this bearish news, it's probably less than 50% would be my guess on it. But we'll see how things change and how things turn. So if the charts say we're not at a top yet, per the new data I just shared, and the industrial cycle says we're not at a top yet, and the copper to gold cycle says we're not at a top yet, and Michael Saylor is buying it every day like it's a sale, then maybe, just maybe, again, do your own research. This isn't the end. It might be the beginning of something big. So everything here, take with a grain of salt. You need to make your own decisions. We are in new territory. I don't think anybody knows what's going to happen at this point. And I think you just need to get as much data as possible and make the best decisions for you and your family. I definitely am not cashing in. I continue to hold my strategy. I continue to hold my Bitcoin. I continue to trade BMNR every single day and pick up shares at the bottom. Sometimes I win, sometimes I lose, but my winning streak has been very high, profitable 17 out of 19 weeks trading in terms of picking up more shares. I'm not subject to, I am still subject to market drop. So when I hold BMNR and it goes down 40% or 50%, I still take the loss in my portfolio. But when I'm trading, I'm buying more shares all the way down. So when BMNR recovers, which is what I believe will happen in the future, the shares that I pick up at the bottom are worth way more. So I'm in a way better position than if I just sat there and I held. Make sense? So that's my game plan. That's what I do. So instead of buying at the bottom, I trade at the bottom. I also did put new investment money into my account a couple days ago. I deployed additional money into BMNR yesterday. Bought low, and I also sold out as well. And so I'm waiting for the price to drop again today to buy back in. Okay. So I will put new capital in from time to time because I do believe that long term we're going up. And so I continue to hold strong on BMNR and strategy and Bitcoin into the future. And of course, Ethereum with that. I don't hold any Ethereum personally. I hold the 3 stocks I was just telling you about. Okay. Hope this serves you. If you want to get my book, you can snag it down below. Comes with my whole trading strategy in there with a video on how I do it. So I hope that serves you. We're at 93K right now. It's so funny. My phone, it's so weird. I've never seen this before. My phone says 95K. Now it's reset. My phone all of a sudden had a thing with a 95K in Bitcoin. It's not 95K, not at all. It's 93,000 right now, 93,003 something. So anyway, hope this serves you. And, do your own research on stuff, get more data. Again, we're in a rough time, and I do understand, like, it sucks going through this. Nobody likes to see the portfolio drop. Nobody likes the uncertainty. And hopefully we continue with the cycle, because the 4-year cycle is dead. And so hopefully we continue with the cycle into the future where things get better, and they get better towards the end of 2025, and they remain steady into 2026, and we go up. So that would be the game plan. That's what I'm planning for. And I don't know whether that's going to happen, but it's what I'm planning for. It's what I believe in. It's why I continue to hold these stocks, because the alternative is taxes and inflation and management fees eat your money. And again, as I've said so many times before in these videos, I don't believe very much in traditional finance just because the hurdle rate to win is like 12% to actually keep your head above water when you take into account taxes, inflation, monetary debasement, and you also take into account asset inflation. So the wealth, the disparity is getting larger and larger. If you take a look at basically the United States, the percentage of people who own the majority of the stock market or own the majority of stocks in the stock market, it's like the top 10% of the people. So the people who hold assets, they win during times where assets are going up and houses are going up and the stock market's going up. But you have to take into account monetary debasement. And when you look at the average printing of money for the last 100 years of 6.5%, when you look at the amount of money pumped into the economy in 2020 and 2021, like 40% more money in the money supply. Scott Bessent was on the news last night and he was talking about the bag of groceries for people checking out of the store went up from $400 to $515 back in the COVID period and after the COVID period. So when you look at $400 to $515, that's like a 30% increase. So when you go to the restaurants, it was funny. I was just in Canada, and we were going out and eating at all these amazing restaurants. Me and my girlfriend and her daughter, and so we were there, and it was like, wow, it's 30. Canada's so cheap in terms of the U.S. dollar; it goes far there. But even the prices were so much cheaper, and it's because it's at a 30% discount with the currency exchange. And I was like, wow, this feels like 6 years ago when I used to go to Los Angeles and I used to pay like $300 for a good meal, like a really good meal in LA. That's what I was paying in Canada right now. It came out to like US dollars of $250 for a really good meal. Now in Los Angeles, when I go out for a really good meal, it's costing me $500-600 for two of us. And so you look at the prices of restaurants have gone through the roof. When you look at the prices for groceries and people are going, $400 bag of groceries, $515 is what it was costing after COVID and during the Biden administration. This is Scott Bessent's words, okay, during the Biden administration. And so now the costs are supposedly going down, but ask Americans and ask people around the country if they feel like the costs and prices are going down. People aren't feeling that in their pocketbook. So regardless of what any administration says right now, the consumers are not feeling that in their pocketbooks. People are feeling that things are getting more expensive. And because when assets go up, like the stock market and asset inflation, when you go to buy them later, if you weren't in it, it's way more expensive. So the people who keep their head above water are people who have assets like houses and people who have assets like money in the stock market. But if you're earning 12 to 14% in the S&P 500 over the long run, you literally have your head barely above water. So even that doesn't win because you got to take into account taxes, money printing, asset inflation, management fees that people have on their portfolios. And when you put in, and of course, the CPI, which is inflation, you put all of that together and you add it all up, and that equates to about a 12% hurdle rate where you got to jump over the hurdle of 12% just to keep your head above water. So traditional finance, that's what they sell. That's their story. And I'd rather hold through these chaotic times and be involved in things like BMNR and MSTR that have a chance over time. Like if you look at Bitcoin, averaging, 50% a year, maybe Bitcoin does 30% a year over the long run moving forward. But if you look at Bitcoin, I'd rather hold that so I have a chance to win and continue to get wealthy than stay in traditional finance, which doesn't give a person an opportunity to do that. And when we know that 80% of the fund managers aren't performing the S&P, we got a real problem. So that's why I hold through the chaos. That's why I go through these times. I would say it's stressful for me too. During these times, I don't like to see it drop. I don't like the uncertainty, particularly when you expect one thing and then you get another thing. The thing that I take great moments of calmness, I should say, with is the fact that I believe firmly in Bitcoin in the long run, like 150 million %. I believe in Ethereum and the blockchain in the long run because all the smart money's going there. All the financial and institutional money is already there. The fact that Larry Fink wants to tokenize the blockchain, I believe in all of that. I want to make sure I'm not late for another call here. I believe in all of that. And so that's why I continue to hold, and I will continue to hold into the future. And the only time I will ever sell anything is if I have to fund a company and invest in a company where I believe my company is going to produce and outperform in the long run more. So I will take profits from my investments and I will put that into my companies and businesses. But overall, I'm just holding on for the long run. And I do think we're going to have some potential for some things to pick up, and we're going to continue to extend this into 2026. And I do believe that Tom Lee is right, and I do believe that Saylor is right. I don't believe any of the price predictions by the end of the year, because I think that whole model of the 4-year cycle is dead in terms of October and November being Uptober and Moonvember. We're going to have to change the names of those because it's literally Bottomtober and Crapvember is what we've all experienced. So we got to change the names and give them new names, but that doesn't change the future bullishness of the blockchain, the new financial system, the fact that we are out of snail mail, which is the current financial system, and we're into the world of sending money via email, metaphorically. That's what the blockchain is. Send it in seconds. Okay. So that's where the world's going. We know this, and good on you for being strong and holding during these times. I know it's tough. Again, you have to do whatever's best for you and do your own research and make sure that you make the best decisions for you and your family. And mind you, everybody bought in at different times, so it's really hard for somebody to give a viewpoint of like, this is the right move, because, it can only be true for you, whatever's true for your situation. Because whenever you bought and how much money you put in and what you need for your lifestyle and what you're counting on, you got to make your own decisions that are true for you. What I say can't be true for somebody else. It can only be true for me. But data is what we can all look at and then take a look at what we believe in our knowing of what's going to happen based on the data, and then make the best decisions possible. So good on you for being here. Good on you for continuing to persevere. I do fully understand what it's like right now. We're all experiencing it. So hopefully we'll all get through this together. And somebody says a Santa rally's coming. Somebody wanted to know what my BMNR price was that I picked it up at yesterday. I picked it up at 31, around 31. And then I did sell out as well. So I'm waiting for it to drop. My signals are coming that wherever we were with Bitcoin, it's dropping right now. Yeah, it is dropping, right? So, and BMNR is dropping from where it was earlier. So I'm going to wait for it to drop more and buy back in once I get my signal. And that's what I'm planning on. Okay. So I hope it serves you guys. I hope you have a great rest of the day. And mind you also, like my original purchases on BMNR were at $60. So I put a lot of money into BMNR at $60. And then I traded my cost basis all the way down over the last 4 months to really, really lower my average price. So I traded my average price way down. But I bought in high, very, very high. Lots of friends that I told about this through their own decision, they actually made decisions and they bought in much lower than me. But I continue to trade and lower my average price. So hope that serves you guys. Hope you have a great rest of the day, and stay well. Subscribe to the channel if you're not subscribed. Leave a comment if you want. If you want to grab my book and my trading strategy down below, feel free to go do that. It's free. And I hope this wins for you. I hope things turn around. And today was a nice day from where we were last night. So let's see if we can continue on with this. Hope you do well. Have a great rest of the day, and talk to you soon.